Having interacted with thousands of resellers and online business owners over the past few years, I'm aware of the most prevalent tax myths out there. Running an online business can be exciting and rewarding, but when it comes to taxes, a lot of myths out there can cost you if you're not careful. Today, we're tackling 5 tax myths that can trip up online business owners. Hey, my name is Mark Tu, and I'm a CPA and former reseller who specializes in helping resellers and online businesses with taxes and with growing their businesses profitably. So let's dive right in. Myth number 1, I don't need to report small payments or side income. This is a big one. Many people think if they're earning just a little on the side, it doesn't count. But the IRS requires you to report all income no matter how small. That includes income from online marketplaces, freelance work, side gigs. Whether you make $1,000 or $100,000, it still needs to be reported. Ignoring small income can lead to penalties and audits down the line. So keep accurate records and make sure you're reporting all of it on your tax return. And as I've recently talked about, the IRS is continually lowering the threshold for marketplaces to report your income back to the IRS. So if you don't report your income, they'll eventually reach out to you. Myth number 2, I don't need to pay taxes quarterly. I'll just settle up at the end of the year. A lot of small business owners, especially those newer to online selling, think they can just pay all their taxes once a year at tax time. But here's the catch. If you're self-employed or own a small business, the IRS typically expects you to pay estimated taxes quarterly. That means you're required to pay taxes 4 times a year, not just once in April. If you skip quarterly payments or wait until the end of the year, you might end up with a large unexpected tax bill, and on top of that, you could face penalties for underpayment. This can be a real shock to the wallet, especially if you've had a good sales year and didn't set aside enough to cover it. Note that not everyone is required to make estimated tax payments. There are some exceptions, and you can learn about those by watching this video, and the link for that is below. To avoid surprises, it's a good idea to estimate your taxes and make those quarterly payments. Many online sellers find it helpful to set aside a percentage of each sale for taxes. That way you're more prepared and you won't have to worry about penalties or scrambling to find funds at the end of the year. Myth number 3, everything I buy for my business is deductible. If it's for my business, it's a write-off, right? While many expenses are deductible, they must be both ordinary and necessary for your business. For instance, buying inventory, office supplies, shipping materials, those all count as business expenses that are deductible. But luxury items like a designer bag or fancy dinners may not qualify unless you can specifically show how they're business related. So keep receipts and make sure those expenses you're deducting are truly relevant to your business. So what about your hair or your nails that you get done for your sourcing pictures or your haul YouTube videos? Here's why personal grooming costs unfortunately don't typically qualify. The IRS doesn't consider haircuts or nails or other personal grooming expenses to be ordinary or necessary for your business. While looking good on camera may feel essential to creating content, the IRS doesn't allow these deductions unless the expense is specifically tied to a business purpose and has no personal benefit. For instance, if you were buying a costume or makeup that you only use in your business photos or videos, that could be deductible. But basic grooming like haircuts or manicures, which you'd also enjoy outside of work, won't pass the IRS test. It's unfortunately not partially deductible either, like you can do with your cell phone or internet bill, splitting it out between personal use and deductible business use. Myth number 4, since I'm a small business, I won't get audited. Many small business owners assume that audits are for big corporations only, but in reality, small businesses, especially sole proprietors, can also be targets for the IRS. Certain red flags like claiming abnormally high deductions compared to income or reporting consistent excessive losses year after year can increase your chances of an audit. So make sure you're keeping clean, organized records and reporting everything accurately. It's easier to stay audit-proof by being prepared than scrambling if you get selected. But don't let the fear of an audit stop you from claiming deductions you're legally entitled to. Remember, if you have half-decent records, you have nothing to worry about. Myth number 5, I don't need a separate bank account. Mixing personal and business transactions is a common mistake. Many online sellers and small business owners think it's okay to use a mixed bank account, especially when starting out. But having a separate account for your business transactions not only makes tax time easier, it also shows you're serious about your business. Now, it is technically okay from a legal perspective if you're a sole proprietor to use a personal bank account and even mix your business and personal transactions if you want, but it's just not a good business practice. But if you're an LLC, you do need a separate business bank account unless you want to put your LLC status at risk. Using a business account helps track income and expenses cleanly, can protect you legally if you're set up as an LLC, and may even help with certain deductions. Plus, it saves you from having to sort through a pile of personal expenses come tax time. Understanding these tax myths can save you time, stress, and money, and by staying informed, you're setting yourself up for success and protecting your business. If you have any questions, post them below or come post them in my free Accounting for Online Sellers Facebook group. Subscribe and check out the links below for more resources to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.